Hey everyone, welcome back to the channel. If you've been curious about investing in stocks, but didn't know where to start, this video is for you. Today, we're diving into the basics of stock investing, breaking it down step by step, so that you can confidently begin building your wealth in the stock market. Whether you're looking to save for retirement, buy your dream home, or just grow your money, investing in stocks can help you get there. So let's get into it. Now, I know that the stock market can seem intimidating, especially for beginners. But don't worry, I'm going to walk you through everything you need to know to make informed decisions and start investing with confidence. 1. Understanding the stock market. What is the stock market? First things first, let's talk about what the stock market is. The stock market is where buyers and sellers come together to buy and sell shares of companies. When you buy a share of a company, you're essentially buying a small ownership stake in that company. Let me break it down. Companies issue shares of stock to raise money to grow their business. When you purchase those shares, you own a small piece of the company. The value of your shares goes up and down, depending on the company's performance and market conditions. The goal is to buy stocks when they're low and sell them when they're high, but it's important to understand that stock prices can fluctuate, sometimes rapidly. Over time, stocks tend to increase in value, but it's important to stay patient. Short-term fluctuations are common, but in the long run, investing in the stock market has been one of the most effective ways to grow wealth. 2. Choosing the right broker. How to start investing in stocks. Once you understand the basics of the stock market, the next step is choosing a brokerage to actually buy and sell stocks. A broker is a platform that allows you to access the stock market and execute trades. There are plenty of online brokers to choose from, and many of them are beginner-friendly. When selecting a broker, there are a few factors to consider: fees, ease of use, account minimums, and available tools for research. Some brokers offer commission-free trades, which is great for beginners. A few popular options are Robinhood, E-Trade, and Fidelity, but there are many others out there. Signing up is simple. You'll need to provide some personal information, such as your address and social security number, and then fund your account. Most brokers accept bank transfers, wire transfers, and even mobile payments. Once you've funded your account, you're ready to start investing. But before you buy any stocks, you need to do a bit of research. 3. Researching stocks. How to choose the right stocks to invest in. Before you dive into buying stocks, it's crucial to research the companies you're interested in. After all, you're investing your money, so you want to make informed choices. There are several ways to research stocks. Start by looking at the company's financials. Check the earnings reports, the balance sheet, and the income statement. This will give you a good idea of how well the company is performing financially. Another thing to consider is the stock's price history. Look at the stock's performance over the last 1, 3, and 5 years to get a sense of its potential for growth. But remember, past performance is not always an indicator of future results. Also, consider the type of stock you're investing in. Are you looking for growth stocks, which are companies expected to grow quickly, or value stocks, which might be undervalued and offer steady returns? There are also dividend stocks, which pay you a portion of their profits on a regular basis. Many brokerage platforms and financial websites offer stock ratings and expert opinions. These can be useful, but don't rely solely on them. Do your own research and make sure you understand the risks. 4. Risk management. How to protect your investments. Investing in stocks comes with risks. Stock prices can be volatile, and there's always the possibility of losing money. That's why it's important to understand risk management. One of the best ways to manage risk is through diversification. Diversification means spreading your investments across different types of assets, such as stocks, bonds, and real estate, so that if one investment performs poorly, others may perform well. In the stock market, this means owning shares in multiple companies across different industries. You can also reduce risk by investing in index funds or exchange-traded funds, ETFs, which are baskets of stocks that track major indices like the S&P 500. These funds give you exposure to many different companies, reducing the risk of individual stock picking. Another important factor to consider is your risk tolerance. How much risk are you willing to take on? If you're younger and have a long time horizon, you might be willing to take on more risk. But if you're closer to retirement, you may want to be more conservative with your investments. 5. Staying consistent. Long-term strategy for success. Now that you know the basics of investing in stocks, the key to success is staying consistent. Don't get discouraged by short-term market fluctuations. Investing is a long-term game. Set a schedule to review your investments periodically. This will help you stay on track and make adjustments if needed. You don't need to watch the market every day, but being aware of any major changes in the companies or sectors you've invested in can help you make informed decisions. Finally, be patient. The stock market is a marathon, not a sprint. The more consistent you are, the more your investments will compound over time. And before you know it, you'll be on your way to achieving your financial goals. And that's it for today's video. I hope you now feel more confident and ready to start investing in stocks. Remember, the key is to start small, do your research, and stay consistent. Investing is a powerful way to build wealth over time, and the earlier you start, the better. If you found this video helpful, don't forget to hit the like button, subscribe to the channel, and share it with your friends. I'll see you in the next video.